If you're an Indian student planning to study abroad, you've probably noticed how everything is getting more expensive. Tuition fees are rising, inflation is making daily expenses harder to manage, and to top it all off, the rupee is hitting record lows. So, what does all this mean for students dreaming of an international education? More loans, more debt, and a lot more stress.
Well, money is tight on both ends. For my parents, there are days when they have to put their hands into their savings and fund me just to make sure that I get the basics of living here. I have to be very mindful in where I'm spending my money and be sure that I'm not going over budget even with a single dollar. My first aim was to get into an Ivy League. There was a really good course of construction administration in Columbia, but the tuition and the living cost to live in New York was roughly around 2 crores. So to take a loan more than 1 CR to fund my education was something which I cannot even imagine.
The Ivy Leagues that everyone wants to aim for are usually very, very expensive, and then the repayments would often be higher than the ROI, and therefore I tried to target colleges that are in the safe range when it comes to money.
I personally decided to fund my education through my education loan. So by the time I finished my third quarter, I realized that I have almost used up 70% of my educational loan. And I was looking through ways to navigate it. Luckily, I had landed an internship which supported me for another 6-7 months. But yes, with the rising interest rates and the fall of the rupee, borrowing money has become a little bit of task, to be really honest.
I know that whatever I'm spending right now, it would be very easy for me to pay off most of it because of the tech sector, and the salaries over here are really, really high. And at the same time, by trying to visualize my life once I'm able to, earn those higher packages that I had aimed for when I was in India.
Bhavya and Joel aren't exceptions. In fact, they may very well be the norm. And if you've been reading the papers, you would know that their troubles may have no end in sight. As a former RBI governor believes, the rupee is not done bottoming out. In today's episode, we dive into the growing financial pressures Indian students face while studying abroad. We'll explore how education loans have become crucial in making overseas education possible, the challenges of repayment, and whether students are truly getting a bang for their buck. It's Thursday, the 23rd of January. From the Economic Times, I'm your host Neil Ghai, and you're listening to The Morning Brief. Now, while the depreciating rupee and rising tuition fees might seem like a double whammy for students dreaming of an international degree, there's another side of the story. Some destinations are more cost-effective than others, offering quality education without completely breaking the bank for 13.3 lakh Indian students headed abroad last year. So where are students looking if they want to balance aspirations with affordability? And how are they navigating this tricky financial landscape? To get a better sense, I spoke to Piyush Kumar, Regional Director at IDP, who has his finger on the pulse of study abroad trends and emerging education hotspots for a market that nearly doubled in size from 7.5 lakh students in 2022. So Piyush, you've been around for more than half a decade in this industry. Let's begin with understanding who the typical students seeking to study abroad are and how their profile and preferences have evolved over the years.
So, study abroad actually has seen a lot of growth over the last 5 years. And when you talk about who are the typical Indian students, actually they are coming from all parts of the country. Maybe 5, 7, 8 years back, you would find students who reside in bigger cities. They were the ones who were going abroad more. But over the last 4 or 5 years, we have seen a lot of interest from students who reside in tier 2 and tier 3 cities also. So Indian market typically is a post-grad market. So what it means is that Indian students, majority of them would complete their graduation here, and for their masters or maybe PhDs, etc., would typically go abroad. Almost like 75 to 80% students from India who go abroad go for their masters and higher programs. India has always been a STEM focused market, which is science, technology, engineering, and maths. Now, this trend is only increasing simply because, as we know, that over the last few years, technology has become so important that most of the jobs which are also there need your understanding of technology. And this is something which they have become more clear about, because it does give them a clearer path to job and maybe future permanent residency and citizenship. A huge majority of the students who go abroad actually go and study in maybe top 2 or 3% universities in the world. So while we talk about Ivy Leagues, etc., and all, yes, Ivy Leagues and the likes of them are few, and obviously the seats are limited. But then there are so many universities which are ranked among top 500 or 700 in the world. And we also need to understand that those are really world class universities. If we all very well know that not many Indian universities are ranked as high as those universities. So even if they are going to study, say for example, a university which is ranked 400 in maybe a QS ranking or a THE ranking, it is still far better in quality than what you would otherwise get in an Indian university. So Indian students are very open to go and study in those universities. And as long as they are studying the right program, they are able to find jobs and they are able to make a career there. And the students also understand this.
Piyush, if I were to ask you, what are the factors that are driving the decision-making process for Indian students who are choosing universities, especially in the light of the rising tuition and living costs across the world? What would you say?
So, see, cost is one of the factors which the students look at, but there are many other factors which is very, very important drivers of choice for Indian students. For example, the post-study work rights and immigration policies is very, very important for Indian students, because most of them who want to go and study abroad also want to gain some work experience there. And if they get a chance, they would want to go for a permanent residency followed by a citizenship there. So those policies are very important. And we have very clearly seen that any destination country where the post-study work right is not attractive, it doesn't really attract Indian students in those many numbers. Apart from that, people look at obviously the ranking of the institutions. Students look at the safety and security piece. Students look at how multicultural the society is or the country is. Apart from that, nowadays, because Indian diaspora is very strong in many of these countries, a lot of students' decision is also driven by the fact if they have friends and families abroad in those countries.
Where do you see the most significant growth in applications from Indians? And are new destinations emerging as favorites? I know IDP serves 6 out of the top 10 markets, correct me if I'm wrong. But are there other markets beyond these that are also experiencing demand?
Yeah, Neil, you rightly said that we serve top 6 markets, which is the US, Canada, the UK, Ireland, Australia, and New Zealand. And this is where more than 80% of the Indian students still go, right? So Indian students continue to target these countries because they are English-speaking countries. But yes, there are some new destinations which have come up. So, for example, Germany has come up pretty strongly because there is a segment of Indian students for whom cost becomes the most important factor. And Germany has come up as a very attractive destination for such students because typically in public universities, there is no tuition fee in Germany, even for international students. Apart from that, you have destinations in Europe like France or Singapore has always been there. And there are some niche destinations where students go for some specific programs. For example, for medical related programs, students do go to Eastern European countries or even countries like China, etc. But by and large, 80% of the Indian students still continue to go to the English-speaking countries, and maybe Germany and France would be the next ones in line.
So when do students typically decide to explore loan options, and how does that influence their choice of country or program?
The process would typically start after a student has got an offer letter, because when you go to a bank, the first thing which you would need to have is a valid offer letter from a university, right? And the process would take maybe about between a month or 2 months. But over the years, yes, I think students are more open, parents are more open to take loans, simply because the government has very good policies in terms of giving collateral free loans of a higher amount, plus the interest rates, even now in India, is between, say, on an average 9.5, 10%, which is pretty attractive. The repayment periods are very flexible. So I think more and more parents now realize that they can actually go for higher ticket loans and very flexible repayment policies.
How many percent students would you say, opt for loans at present compared to maybe 5 or 6 years ago?
So I would say that nowadays, almost like 70-75% of the students would definitely go and take education loans. And this figure has increased because the number of students who are going abroad, also from tier 2, tier 3 towns, etc., is increasing every year. In fact, the ticket sizes of the loans have gone up. So now it's very easy to see a ticket size which varies between, say, 25 lakhs to maybe 50, 60 lakhs on an average. It's very, very common. In fact, very recently, State Bank of India actually announced that they are coming up with a product where they are willing to give up to 50 lakh rupees as education loan, completely collateral free, right? So these are the kind of policies which has led to a boom in education loan market and has made it easier for students and parents to avail of education loans.
So, in your experience, students who are not studying STEM, for example, if I'm pursuing political science or sociology or some other subject related to the liberal arts, is it more difficult for me to get a loan compared to those who are studying STEM?
So I would say which program one is going for is one of the factors. Please understand that banks have their own underwriting policy. Whether they decide to give a loan or not would also depend on various factors, including a student's financial background, etc. So there are a lot of factors playing here. It's not that if you are not going for a STEM program, you will not get a loan. So that is not correct. But yes, it's easier for STEM related programs to get a loan because banks also want to check what is the likelihood of a person getting employment. And that is something which definitely would be one of the key factors.
So we've sort of established that students are flocking to study abroad, irrespective of mounting financial considerations. Why do you think Indian students remain undeterred by financial challenges, including a weakening rupee?
I would say there are a few reasons for it. First and foremost is that studying abroad is such a life-changing decision that a weakening currency, which typically would weaken by maybe 2, 3, 4, 5%, doesn't really deter the students or doesn't really change their plan. It's not that the Indian rupee has collapsed or something where it has gone down by 25, 30, 40%. So as long as the depreciation is about, say, 3, 4, 5% range, it doesn't really matter. The other interesting point which I want to tell you about is that students also see that suppose you go to the US to study, right? And you get a job there. Now, if the Indian rupee keeps on depreciating against the US dollar, and you as a student is earning in US dollar but repaying the loan amount in Indian rupee, it becomes easier for you because you are earning in dollar and your cost of repayment actually goes down. So this is something which I think the Indian students are very savvy. So this is one of the reasons why even the weakening rupee so far has not really deterred the Indian students from going abroad. Apart from that, students also realize that the payment options are very flexible. And hence, if you actually do a calculation financially, maybe even 4-5% depreciation in rupee hardly changes your EMI in that sense. And hence, your repayment becomes even easier.
To be sure, India's young population is one of its biggest assets. And with millions of students looking to enhance their careers with global degrees, the study abroad market is booming like never before. But with this surge in demand comes the inevitable question: how to pay for it all? And that's where the international student loan market comes in. The numbers are skyrocketing as more students opt for loans to finance their education. But what's driving this growth? And how are lenders keeping up with this increasing demand? To break it all down, I spoke to Aniket Dani, Director of Research at Crisil Intelligence, who tracks these trends closely. So, to begin with, Aniket, can you tell our listeners who are the key players in the study abroad loan market and what trends are shaping this segment?
So, if you look at the key players that are there in this market, it is dominated both by banks and NBFCs. But if you specifically focus on NBFCs, there are two major players. One is Credila and second is Avance. And these two players form about 80% to 90% of the market. And some of the smaller players who are trying to enter this market and gain market share are Auxilo, Incred, Prodigy, Empower. But currently, they are still smaller than these two large players.
Aniket, can you tell me what kind of growth has this segment seen and how has the market been playing out over the years?
So, if you look at the overseas loans market, as of June 2024, it was about 1100 billion rupees. And it has grown by about 33% in the past 5 years.
So, where do you see the highest concentration of loan disbursements geographically in India? And is there any data available on the socioeconomic makeup of the demographic which is availing these loans?
So if you look at the overall split, a good chunk goes for overseas education loans. So if you look at overall education loan market and split it into domestic as well as overseas, the overseas market would contribute about 60% of the loans. And all these, overseas loans, majority of these loans would be going towards students who are taking education in the top 4 countries. And these would be your US, Canada, UK, and Australia. So these 4 countries together would contribute about 60-70% of the population. The ticket size is about 20 to 25 lakhs. So the people who will be able to afford this would be your middle class, upper middle class, and HNIs. That is the kind of category of customers or students who typically avail these loans. Because what the NBFCs or even the lenders would check, right, is the repayment capability of the parents, even if not the student himself, because he has no job currently. And based on that, the loan amount is decided and provided it to the student. So it is slightly difficult for a low-income population to get these kind of high-ticket loans.
So, Aniket, can you tell me what are the default rates like for this asset class? And what does that tell you about the nature of these loans? Are they benign in nature or are they malign?
So if you look at gross NPS, which is an indicator of asset quality, for education loans sanctioned by these specialized NBFCs, and I'm looking at only all the loans sanctioned by NBFCs only. So if you look at all the asset classes, education loan has the lowest gross NPA. So for these large specialized NBFCs, the NPAs are about 0.2 to 0.3%. Whereas even if you take other loans like gold loans or housing loans, there the asset quality is higher than education loans. So for example, housing loans would be about 1 to 1.5%. Gold loans would be about 2 to 3%.
Okay, and can you shed some light on the repayment capacity of the borrowers when they graduate? Do you anticipate any shifts in the default rates given the current economic challenges? Are there any specific indicators that you're particularly keeping an eye out on?
So 2-3 things that we keep an eye on. One is the regulations or the policies of the specific country where students go for education. So are there any visa restrictions? How many jobs are being created? What is the overall inflation rate? Are there any layoffs that are happening? So all these are early indicators of probable defaults going forward. But what we typically see from the market is that these NBFCs, when they lend for education loans, They provide loans only to students who are taking up education in the top 50 or 100 institutes in the country. And if you look at globally, there are third party agencies who provide a lot of data for these top institutions in terms of number of enrollments, the kind of courses, the placements that happen, and average annual salary that these students get when they get placed. So all that information is currently available from third party sources, which helps in doing a good credit appraisal related to the student and the degree that he is pursuing.
How are lenders, leveraging technology to manage risks and improve repayment rates amongst borrowers?
So if you look at use of technology, it is being used across the value chain, right? From doing your KYC to final monitoring. So if you look at steps, you have to have KYC, you have to do all the credit appraisal, then provide the loan and then monitor the loan and get the repayments back. So in terms of KYC, Government of India has come out with this India stack, and RBI regulations also have helped. So documentation has reduced, the speed of credit appraisal has increased. Also, there are a lot of third-party global agencies who provide data related to universities. So all that gets fed into the system, which is making it slightly easier for lenders to take those decisions. And with all this digital data coming in, right, you have a lot of AI ML models which are being built, which can quickly analyze based on past trend and predictive techniques, what is the probability of default for that particular borrower. So all these digital initiatives are definitely helping the lenders make their credit appraisal systems more robust, as well as stringent monitoring of the portfolio.
Why do you think, financial institutions and NBFCs are increasingly optimistic about the study abroad loan market despite the prevalent risks that you pointed out?
So definitely the risks are there, but typically if you look at the kind of students, right, who get admission into top 50 or 100 colleges in a specific country, really have to be good. They have to clear all the exams that are there. Their past credentials, which is checked by the institution where they're getting admissions, also has to be top notch for them to get into these top tier institutions. Plus, other than the academic record, on the other side, what financial institutions also check is the parents' background and their asset that they have created. So on both sides, right, the quality checks and the stringent criteria that these top 50 and 100 institutions have for taking in students from abroad gives that comfort that these students who have a good academic background and have got placed into top tier institutions will definitely get some or the other job.
But here's the thing. While studying abroad is a dream for many, it's also a major financial commitment. Did you know that despite making up less than a fifth of the college-going population in the US, postgraduate students account for nearly half of all student debt? And for Indian students, that hits even closer to home, because most of them head overseas for postgraduate studies. As costs continue to rise and countries tighten immigration policies, the big questions remain. How sustainable is this pursuit of a global degree? And are students setting themselves up for success? Or is it a financial burden that could take years to shake off? Here at the Economic Times, we'll be tracking how these trends evolve, especially as countries become more insular and prioritize jobs for locals. That's it for today. This episode was produced by Vinay Joshi and sound designed by Amrit Reggie and Rajas Nair. Executive producers Arijit Burman and Anirban Chaudhary. Thank you for listening. If you've enjoyed this episode, do share it. All episodes of The Morning Brief drop every Tuesday, Thursday, and Friday. You can find us on Amazon Prime Music, JioSaavn, Spotify, Apple, and Google Podcasts. And of course, on ET's own audio platform, ET Play. Until next time, this is Neil Ghai signing off.